Excited to have you here today. We've got an incredible person that's going to talk to us. David Safir with Cash is Clear. He's going to talk to us about some things that we know are going to help your brokerage out tremendously. So we're excited to dig into that conversation. As always, I'm Matt Vi, co-host of Brokerpreneur Podcast, and CEO Dr. Ben Spears is here alongside, helping make sure that everything goes as smooth as possible for your viewing experience. And without any further ado, I'd love to bring on our guest, David Safir. He's going to talk to us today. Again, I mentioned he is the CEO and co-founder of Cash is Clear. He's going to talk to us about how to make sure as a broker that we stay as profitable as possible. We all know with the lawsuit and a lot of other things going on that profitability is something we need to be acutely aware of. That's why we love David coming on and sharing a ton of his knowledge. David, how are you?
I'm great, and I'm excited. Why? Because it's always fun to talk about cash flow in general, but when I get to dig into a specific industry or a specific business model, then we can go into a lot more detail, and the people who are watching and listening get a lot more from it.
Yep, I completely agree. And we're gonna dig into all of that. Before we do that, can you tell us just a little bit about your background and how you ended up doing what you're doing now? Because you're an expert at it. You coach a lot of other people how to be more proficient in what they do. You help real estate brokers and a ton of other people in a lot of other industries make sure that they keep cash flow at the top of mind when it comes to running their business. Tell us a little bit about how you actually got to this point and a little bit about your background really quick, and then we'll dig into those 4 key pillars that we know are going to make a difference.
I'm glad to. I'll make it as brief as possible. I started out with really big companies. I worked for a Fortune 20 company at one point.
Wow.
And we never had to worry about cash flow. I was a general manager, and I was told, go manage the P&L, the profit and the loss, right? Or, well, hopefully just profit. And so I got to learn how to pull a lot of levers to become more profitable. And it wasn't always growing sales, but we'll come to that. And then I started doing some consulting, mostly because people knew that I was a general business person, and I generally consulted. And one day I had an epiphany. They're all dealing with cash flow issues, whether they call it sales issues or cost issues. At the end of the day, they were all having a struggle with their bank accounts. And so I looked for materials to help my own clients, couldn't find any. You'd see articles. Here's 5 ways to fix cash flow. Here's 10 ways. But it was maybe 10 or 15 things that they just kept recirculating. And by the way, the last thing was always buy my product or service and all your problems will be solved.
Right.
So I said, there's got to be at least 99 ways I know of to do this. And sure enough, I listed them out and kept on going. I'm now up to 213 cash flow tactics and strategies. And not every business can use every one. But there's so many strategies to use for every business, which is why it's going to be exciting today to talk about real estate brokers.
Yeah, I love that. So let's dig in, right? Because we've got a lot to talk about. Well, like I said, we're going to focus on 4 components of that. Now, I'd love to at some point get all 213 of those, but we can't do that today, right? So let's stay kind of in this group that you and I talked, and we discussed, what would really be beneficial to brokers, especially in this current, climate of what's going on with real estate. And we decided to start with one that was really, which is geography. We decided to kind of start with that one because we know that although there's a lot of things going on nationally, real estate really is really local when it comes to running your brokerage and being successful with it. So we said, I asked you, we talked a little bit, and you're like, hey, Matt, how about if we start with geography? I said, David, you're the expert. Let's absolutely start with that. So tell us a little bit about what we mean when we talk about geography helping impact your cash flow.
Absolutely. Matt, one of the things I know about brokers is they all have started somewhere, and there's a locality that they know. There's very few that operate with true knowledge on a statewide level. And certainly this is the case for real estate agents. And so the reason this came up is I'm working with an accountant. He is working with a real estate broker, and he's trying to help her figure out how to increase her cash flow. And he talked about bringing on another agent. I said, well, what percentage of the local market does she have? He's up in Saskatchewan, and so they've got towns, and then it's another half hour to a town. It's very distinct. And he came back and said, listen, David, she's got 60% of the market share in the local town. I said, well, then you don't really grow in the local town. She's got to establish an office somewhere else if she wants to sell more retail properties. And
Absolutely.
so I would suggest this to every broker: see where you are located. Are you in more than one area? And if you are in multiple geographies, try to figure out the profitability and cash flow by geography. And profitability is sort of equal to cash flow with a real estate broker because there's very few hard assets. It's mostly the money comes in, it's dispersed, and then you wait until the next deal's going on, unless you've got ancillary revenue. And so it's sort of easy to figure out where you're making the most sales, but what is it also costing you in that geography? And then you say, where do I want to trim?
Right.
And where can I put more resources?
Yeah. So how much of that current market do you have? And then what are the other markets that you could possibly easily serve? And then your capacity in that market. Is that kind of what you're saying?
Absolutely. Because if you're at a low percentage point, you might be able to grow by hiring away key agents from other brokerages.
Right.
And be able to grow not just incrementally, but do a step function where if you're 2%, it doesn't take much to get 4% in a market.
Right.
Versus you're at 60%, getting that extra 2% is a lot harder to do.
Right. Taking that next step. And so part of the way that they do that, right? So you mentioned recruiting, right? And we help a lot with people in recruiting. But there's a couple of other ways from a geography standpoint that they could dig in and roll their sleeves up and be able to benefit. Now, of course, some of it is adding agents, but also impacting other sectors of the market, right? So whenever you and I kind of talked about this, we said, maybe they're doing a lot of commercial and maybe they need to dig into residential, right? Or maybe they're doing a lot of luxury properties and maybe they need to get into first-time home buyers or something along that line, right? So there's a lot of different options for them on what to grow in the market. And you made a really good point in one of the conversations that we had. If you're tracking your numbers and you're really paying attention to the data, the answer is clear. It's right there in front of you if you kind of know what you're looking for. Is that correct?
It is. The trick is knowing what you're looking for, and it's oftentimes not in the P&L that you're going to get from your accountant. Figuring out product profitability, it's not difficult. It just takes additional work. And so you would need somebody to help you with that. It may be your accountant. And Matt, I don't know if you guys actually teach how to do that or not, but that's the type of thing that I do with my clients. We figure out product profitability.
Yeah, we leave that to the experts like you, David.
Okay.
we have those conversations, but we absolutely, whenever it comes time to roll up their sleeves on things like that, we love them tracking and having that information available, and we love them being able to really look at the data to help them make that next step decision. But whenever it comes time for them to look at things really specific, like what you're talking about, man, we want them to reach out to you and have a conversation with you and allow you to kind of point them in the right direction of what to do. So speaking of the next direction, you kind of mentioned something just a second ago, right? You said profit per product. Okay, yes. We're going to dig into that one last, okay? Because that one's the last and the fun and exciting one. You kind of touched on it for just a second there, right? But before we dig into that one, we kind of touched on this a second ago as well. Ancillary, right? So there's a lot of other ways that a broker can make money on a transaction, right? They can, of course, have a mortgage partnership, or they can own part of a mortgage or title company or something along that line. But when you talk about ancillary opportunities, that's not the only thing that you're talking about with ancillary opportunities, right? You're talking about taking a close look at everything that's available related to that business, right?
I am. One of the first things that pops into my mind is home warranties, because if I'm not mistaken, that provides an ongoing income stream for every one that you sell. At least the affiliate programs I've seen and been involved with, it's an ongoing revenue stream, which could be great. Imagine you sell 50 houses and you just get a little slice of revenue every month times 50. Well, that can add up, and and then it adds up to you get another 25 the next year because some drop out. Those types of programs can mean a lot, but it goes to anything that is touching a house, carpet specialties or repair people that you might get a small percentage, but it's there, or you don't get paid at all, but they're your referral partners. They're going to refer them back to you.
Right.
Either it's a form of getting paid, right? Is you get a
Right.
great referral from a partner.
Yeah. So I absolutely love the opportunity when people can lean into those types of types of ancillary ways to receive benefits. So so of course, mortgage and title, you can have
Yep.
partnerships as long as your state allows it, all that kind of stuff.
Yep.
Like you said, home warranties are another big one, right? Right now, there are in a lot of areas, okay, one that kind of gets overlooked a little bit in my opinion is, there's a lot of apartment complexes that pay very nice, legal to receive. This is important to point out, legal to receive compensation to real estate agents when they refer somebody over and the person actually rents the property. There are some apartment complexes, at least in the area that we're in, that if the person renews their lease a year later, you actually get a small portion of that, right? So now what happens a lot of times is we have real estate agents or broker owners that have leads come in, and when the leads come in, it's something that the person wants to rent or something like that, or they're in a position where they can't purchase right now, and then they just kind of go, okay, well, there's nothing really I can do with that. And the truth is, there might be some opportunity for people to do things like that, and if they're paying attention to their income statement and their profit and loss, like you're talking about, they might see some things on there, and they go, wait a minute, a year ago, we put somebody in an apartment, and when we put them in that apartment, we got this fee. Why don't I do more? Why don't I do more of that? Right.
But so this was actually a back pocket one that we hadn't talked about that I was going to bring up. But here's to me the bigger picture. You are getting paid to plant seeds.
Right.
Who is going to buy a house? Where are the new home buyers? They are in apartments renting right now. That's your future customer base that you get to cultivate and keep track of. So one of the things, here's a technical piece. When you are doing your bookkeeping, have your bookkeeper, your accountant, break out the type of revenue that you're getting. So you can literally have a line that says apartment rentals. And so you see how much revenue you're getting. Retail home sales, how much revenue you're getting. It depends on how granular you want to get, but know what those are. It's much easier to keep track of. It's just right there on your profit and loss.
Yeah, I love that. And so I'm taking notes, trying to write as quickly as you're saying these brilliant things. Okay. So I love that one. So you just brought up something, and you and I kind of talked about it before, and I hope it's okay. I'm just going to kind of throw this into the conversation because it was kind of a little bit about what you were just talking about. It's organic versus incremental growth in your income, right? And so you were just kind of talking about, paying super close attention to all the things going on with your business, because there's different ways that you can have growth. So if you don't mind, do you mind jumping into that for just a second? I know we kind of had a plan of what to talk about. Do you mind discussing organic versus incremental growth for us for just a minute?
Sure. To me, organic growth is that you've got a group of agents and they're growing their own business at a certain amount. I mean, just with inflation, right? Home prices are growing. You can expect to have a certain amount of growth just because home prices are going up generally over time. That's good. And maybe you can do well. But what I'm talking about with incremental growth is being able to acquire a revenue stream. And that could be you've never sold an ancillary product.
Right.
And all of a sudden you've got these home warranties to sell, and it adds 2% to your bottom. I don't know what percentage is. It could be a very small percentage, but it will grow over time. The other way that I talked about this with this accountant is what we were talking about is go get this a really good agent in his marketplace. but it only works if the marketplace is not saturated, and this brokerage had
Right.
saturated that market. So I said, well, fine, go get a really good agent and turn them into a co-broker in that other geography. So
Right.
they've got a vested interest in the business, but they're bringing with them 10 or 20% of that geography, because these are small enough towns that there's always a really good agent that you can find with a big chunk of the market.
Yeah, so that's so good. So we're going to dig into that for just a second, because absolutely
Okay.
those are both really, really great points. Okay. So to be very practical about this, if you're a real estate broker and you're already doing a certain amount of business in a market, take a look, and you do this through your P&L, because things are broken out, by the agent and how much they brought in. You have your quartile reports. Maybe you're pulling some information from the MLS, and you're seeing what your agents are doing. And then you're taking a close look and saying, okay, wait a minute, geographically, we're covering this much of town, but this part of town right here is just not being covered by us. We're doing well in all of these areas. Maybe I need to go find somebody that in this part of town is doing real well. Or maybe I'm doing real well everywhere, but I'm not doing any commercial anywhere. Or maybe I don't have any investors. I go back and look and pay attention to the breakdown of my business, because it is all laid out the way that you've suggested. You go back and you see, okay, none of this or none last year was done by a real estate investor. But the year before that, 30% of my business or 20% of my business was done by a real estate investor. Now, when you have that data in front of you, you can take a close look at what's available, what you succeeded with before, where there's other opportunities in that market. Do I lean into the luxury market now? Do I lean into the rental market now? Do I see that luxury is not moving and my market share is dropping, but luxury isn't going as quick? So maybe I need that first step, move up home, more inventory of that, right? So that's taking a look at both the geography, the incremental growth, and the ancillary, correct? Am I missing anything there, David?
I don't think so. I think you've got it all.
Good. I love that. So now we got to talk about that. Now we got to talk about the fun one, right? And the fun one is profit per product. Okay. And so from my perspective, whenever we talk about this, it's per person productivity. If you're going to speak about it very generally, if you're going to get a little bit more specific, it's per agent productivity, right? It's going to break down into, what they're doing. That's the way we typically look at it. But in one of our conversations, you were like, well, Matt, there's other products to look at, right? What are the other things that you're doing that are bringing in this revenue? Are you looking at those as a quote unquote product for your company? So can you, I'd like to spend a couple minutes on this one. Do you mind, kind of digging into that for us?
That'd be great. Well, products, it's interesting because you've got an agent as a salesperson. And so you're really looking at more sales agent profitability when you're talking about agent by agent. So what I'm referring to is the type of product that you're selling. You've referred to luxury houses. You've referred to entry-level houses. You've referred to commercial real estate. You've referred to investors versus the individual home buyer. Every single one of those, well, I mentioned, so that's the type of client. So we're going to put aside profitability by client type for a minute. We'll stick to the products. So if you break it up into high level, luxury homes, middle range homes, and to lower range homes, there is a cost to every single type of product that you're selling.
Yeah.
Now, I'm not a real estate expert. I've done hundreds of transactions, but as a real estate investor or as a lender. But my guess would be luxury real estate is harder to sell and more expensive to sell than entry-level homes. So you might have much better profit margins on your entry-level homes. And you might actually find out it is more profitable to sell 10 entry-level homes than to sell one equivalent house that's worth the same value, that it's more profitable sell the small ones.
Right.
But it could very well be the reverse because there's so few good people to sell the large homes. I don't know. It's going to be brokerage by brokerage, and you could have two brokerages across the street, and it's the exact opposite results. You've got to do the analysis.
Yeah. Yeah, I love that. So let me, since you and I talked about this, the original, originally, I kind of, I spent some time thinking about this
Hmm.
basically. And so here's how I would make sure that if you're a broker listening, this is how I would make sure that that you pay close attention to this. There's a per unit cost, right? And then there's also a cost that is associated beyond per unit, and it's a percentage of the actual sale. So I think it's important to understand both of those, right? And the reason why I think it's important to understand both of those is the per unit cost, if you're looking at a luxury home, might be completely different than a percentage of sale cost. And the other thing that happens is, who is selling these luxury homes inside your office, right? Are you paying for all of the advertising as a broker? And if you are, what kind of return are you making on that? If you're paying for all the advertising, but the compensation plan that you have with most of the agents that are selling it is not the most advantageous compensation plan for you, you could actually be losing money on this if you're not paying attention to where all of that where all of those resources are going, right? Is that accurate?
Yeah, it's extremely accurate. If you're paying for everything, let's just say advertising, but you're only seeing a certain amount of sales of those out of those ads, then you've got to figure out, is it really profitable for you? Now, if you were to look at internet sales, or let's call it newspaper sales, they will measure the profitability of individual ads. So it's a great idea. The other thing is what's called velocity of money.
Yep.
What takes more time to sell?
Right.
I'm guessing a high value home for the most part. And so you're might have the exact same home advertised 6 months versus a small one. It's one and done.
Right.
And so all of this goes into play into figuring out profitability per product. And if you really got good systems in place, you'll know the profitability for every, not just the aggregate group, but for every single uh, property that you sell.
Okay. So, all right. So I'm gonna ask you a question. What I'm gonna do is I'm gonna ask you for like three things that a broker should tell their accountant to keep an eye on to help break down that profitability per product. Okay. Just
Mhm.
three. I'm going to ask you for three tips in just a second about what it is that they can go to their accountant so that they have a practical takeaway from the conversation. Okay.
Okay.
Before I let you do that though, I'm gonna dig into one other thing because you just kind of said this, and I want to make sure before we move on that we pay attention to this part of it. If you're tracking this, you can make an intelligent decision about what to do with the information that you're tracking. If
Mhm.
you're not tracking this, you're just going with your gut, right? If you're not
Yeah.
tracking this, you're just saying, "Well, I've always done it this way in my business." Well, I think real estate brokers and real estate agents would agree that the market is always changing. The only constant in real estate is change, right? With most businesses, but with real estate especially. If that's the case, are you doing as a broker, speaking to all the brokers out there, are you doing as a broker the same marketing and putting the same resources in the same way that you did 5 years ago, 10 years ago? Because if so, it might be time to take a look at that because that could be impeding your cash flow. So, okay, so David, let's circle back to what I said just a second ago. What's
Mhm.
three things that if a broker is listening to this right now, what are three things that they could go to their accountant and say, or bookkeeper and say, hey, I want to make sure that we pay attention to these things because I need to make some decisions based on them in order to improve my cash flow. What conversation could they have with them?
So we've already talked about one, which is categories for revenue. You got to do that. So go talk to them. It should be relatively easy to do. I'm going to say it in level of complexity. So that's number one. Number two, most people are using QuickBooks. There's something called classes that you can establish.
Okay.
You can establish a separate class for every single property. So you can track profitability by property. This is not like some harebrained idea. When I was dealing with real estate, we tracked profitability, which was the revenue and the expense for every single property. That's
Love it.
number 2. Ask them to set up a class per property. Number 3 is allocate costs that are general costs to individual properties. What does that mean? You have a big ad, it covers 10 properties, fine. Chop it up into 10. And if that's the easiest way to do it, you don't have to measure how much space everything takes up, which is even more complicated. And say, if it's $1,000 ad, we're going to add $100 to each one of those property costs. It's extremely doable, but you've got to expect you're probably going to have to pay your bookkeeper more, your accountant more, because it's work on their side. A little bit of work on your side, a lot more work on theirs. But once you've done that, then it's really easy. You know who sold these properties. You know which class of property they are. And you can start saying, well, let's just filter out for all the properties that are under $300,000. How
Right.
profitable was it? All the ones over $1 million, how profitable were those? And who was selling them? And that you get that's how you get the raw data that you need, that you can do the analysis down the road.
Yeah, that's so good, right? So let me point something out, right? So the property managers, right? They have software. They use accounting software, but they a lot of times their accounting software is most of the time their accounting software is built into the software that they use to actually manage the property and manage the tenant, the client, all that kind of stuff. Right?
Yeah, absolutely. Property management's a different animal.
Absolutely. But so what they do really well is what you were just talking about. They break it down per property. Because they have to. There's a certain amount of accounting that they have to do with the owners that they with the owners that they have. So if you're a broker and you're sitting back going, okay, so I don't know if I want to do this, or I'm not sure how I would put this in play, or anything along that line. Just think about how much benefit that has to a property manager. Now imagine you're doing 100 transactions, 500 transactions a year. And at the end of the year, you can go back and you could look at which properties are performing the best. Think how much that would help you from a recruiting standpoint. Think how much that would help you because now you can go back and say, okay, what agents are doing really well in this sector of the market? I want to go after them because the way we do things is the most profitable way of doing things with that group of people. I think that would be really powerful. And if you're looking for the results of that, think about property management. Property management would struggle if they didn't have those things in place to help them out. So I think that's again, David, you're crushing it here, man. You're doing an absolutely fantastic job. It's such great information. Hopefully everybody's taking a lot of notes.
If I can just say what's the difference, it's mindset, right? The mindset of somebody who's doing property management is I have to keep track of this. It's a pain, but I have to, otherwise I'm going to lose business. Well, we go generally the path of least resistance in our lives. Right. And so the mindset has to be, this is a pain still, but it's my business. You're running somebody else's business on the other side. If they're asking you to track it, it's the same thing for your own business. It's harder, but you're going to see the results. And then it's not fast and easy, but you will see results within 6 months of transactions. You'll start being able to have enough data to analyze.
Yeah, I love that. And here's how I would judge that, right? So if somebody was struggling to decide whether to do that or not, sit back for just a second and ask yourself, if I could snap my fingers and have all this data at the end of a year, would I be able to improve my business by having this data? And if the answer is yes, man, roll your sleeves up. It's time to pull yourself up by the bootstraps, and it's time to start gathering that data with those 3 tactics that you just shared with us. So that's absolutely fantastic.
I need to give you a 4th tactic. It'll be fast.
Well, let's go.
If your accountant cannot do this work for you, you need to find a different accountant.
Oh, yes, absolutely.
Whether they're your employee or outsourced, the accounting function should not be wagging your business.
Agreed.
You should be driving the accounting. And unfortunately, you're going to find a lot of you, if there's 100 of you out there and I could poll, 50 to 70 of you would say my accountant refuses to or doesn't know how to do this. So if you're watching this and all you need is a recommendation for an accountant, let me know. I don't do accounting, but so I've got a lot of accountants who follow me. Some specialize in real estate. I'd be glad to introduce you.
I love that. So I've been with and had the chance to work with a lot of companies that there were situations when accounting really was wagging the business, like you just said, the tail was wagging the dog, right?
Yeah.
And so that's a fantastic point. Thank you for sharing that. If you're a broker owner right now and you're listening to this, think to yourself for just a second. Okay, when I go to my accounting person and I say, hey, can I get this? Or what do we know about this? Or how do we get this? Or is there some way I can do these things? And you're getting pushback from that alone is impacting your cash flow.
Yeah.
Because that information is things that you should be able to get. Your accountant should be excited about helping you get to the bottom of those things, because that's things that if they're helping you see that value and they're helping you understand that and they're helping you pull those numbers together in a way that allow you to run your business better, as an accountant, you should be thinking, well, my gosh, that CEO is going to keep me longer. That broker is going to keep me on staff longer because I'm helping them with their business in a way, instead of saying, oh yeah, that just can't be done. I'm too busy. There's too much going on already. I can't do that. Right?
Absolutely. And you're right. And again, I'm going to emphasize, they are going to want to charge you more for this. It is more work, but work it out. It shouldn't be if they're doing very, very little work for you because that's all you're asking for, it could be a large amount, but they should be turning into a profit center for you, not as an expense. Let me just, if it's okay, I mentioned just get in touch with me. This is being broadcast live on LinkedIn, or you might be watching the recording, or you might be years from now. David Safir, right here, my name. I'm the only David Safir on LinkedIn. I'm easy to find. If you need that recommendation, connect with me, send me a message. I'll give you some recommendations.
Yeah, I absolutely love that, and we'll dig into that a little bit more about how they get in touch with you, specifically to hear more about about those 213 ways. You've got my mouth salivating over here. 213 ways to maintain cash flow or to improve cash flow. My gosh, what broker doesn't want what broker doesn't want a piece of that, right? So let's talk about one more thing here real quick, and then we're going to be, just like usual, we'll be very respectful of everybody's time. Okay, So you got into the business, you started helping people out, people started getting results. You've got, a coaching community that you work with. You help a lot of people in a bunch of different ways, right?
Right.
What do you love the most about doing what you do? What is it that just kind of gets you out of bed in the morning and you're like, man, this is the best part. And I can't believe I got to do this today. Tell us all about that.
Probably the best way to tell it is explain a story. One of my early on clients, I got to their company and they said, David, we only have enough cash in the bank for about 2 weeks. We won't make payroll in 2 weeks. And my accountant can't explain where all my money is, but he's also telling me I made $250,000 last year, which is pretty good on $2 million in sales. And literally tears in his eyes.
Right.
And so it was a full-time engagement. So it was a shorter amount of time, but within a week, there was no doubt that he was making payroll because he had all the money in the bank. And it was a 2.5-week engagement. And he said, thank you for saving my business.
Wow.
And it's not just him. It was a family business. So his wife, his oldest son, his daughter, but they also had 10 employees and all the creditors. They had suppliers, their clients. There's this trickle down effect when companies go out of business. And so that's why I'm doing this. It's because I want to help people. It's not about the numbers. This is all about the people. And we said about mindset, and it's helping people really open their minds and enjoying their businesses again, because when there's a cash crisis, it's debilitating.
Yep. Yeah, I love that. And you come in and take that weight off of their shoulders. That's fantastic. So anybody out there that wants that weight taken off of their shoulders and wants to be able to deal with somebody that understands how to make the most of the P&L that they're looking at, that they might be pulling their hair out over, right? How do they get in touch with you? How can they connect with you if they want to reach out to you and talk to you more about how you can help them grow their cash flow?
Absolutely. I've already mentioned about LinkedIn, please message me. Let them know that you heard about me on the Brokerpreneur podcast. So I've got some frame of reference, or just at least that you're a real estate broker. That's one way. The other way is my contact information is there. My phone number is there. My email address is there on LinkedIn. Or hopefully you can see cashesclear.com. That's my website. And you can get free resources. Just go read my blog post. You'll learn a lot. But you can also set up an appointment with me. I'm happy to talk to you about anything. I've literally saved businesses. Yeah, I'm bragging a little bit, but I'd literally saved somebody's business in about an hour because I was able to walk him through it, didn't charge him anything. And he came back a year later and hired me for a different project. And we've got a great relationship. So call me. Let's see what we can do.
I love it. I don't doubt that for a second. You're absolutely awesome. We always love when we have the opportunity to. To connect with you. Thank you so much for agreeing to come on and share all this with us. So everybody, if you came in a little bit late on this and you didn't get the entire recording, there's two big things that you can. Do. Of course, you can just message me, Matt Vi. Just go to Brokerpreneur on LinkedIn, just like David said. There's only one Matt Vi with Brokerpreneur on LinkedIn. And so you can, of course, you can message me. You can email me at matt@prospectboomerang.com. Of course, you can go to brokerpreneurpodcast.com, click on the link on that page. Or if you'd like, you can join us live on Brokerpreneur Not So Secret Society every Friday. All you have to do, pay attention on our LinkedIn page, and there's a way that you can register, come in there, and you can collaborate with brokers from across the country when we talk about everything real estate that's going to help you grow your business. That is how we meet great guests like David Sevier with Cash is Clear. David, thank you so much for being on today and sharing. If you want the replay on this, reach out to us. We're happy to get that to you. David, is there anything else as we wrap up here that you'd like to share?
It's a pleasure, and I really respect the real estate industry. Like I said, I've done a few hundred transactions. It is complicated. So I appreciate each one of you, and I wish each good luck.
Fantastic. We appreciate you being here with us today, David. And as always, to all of our brokerpreneurs out there, we do this for one reason and one reason alone. We just want to be part of your win. Thanks, everybody.